Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this video, we are going to discuss the BBsqueeze indicator. Alright, the BBsqueeze indicator is a custom indicator and it helps traders to spot bullish and bearish trends early. Okay, I'm going to add the BBsqueeze indicator to the charts right away, and we are going to look at how to use this indicator effectively. Okay, now this indicator, as we can see, it appears in an indicator window. All right, unlike the traditional Bollinger Bands that appears directly on the chart. Okay, and forms a kind of a channel around the candlesticks, right? So as for the BBsqueeze, the BBsqueeze indicator, it tries to combine Keltner channels and a momentum indicator to confirm and filter trades. Okay, so it tries to find high probability opportunities for traders. Okay, it uses histogram-based signals, clear histogram-based signals. All right, you can see that whenever you have the green lines form, it's an indication of bullish momentum, right? Basically, whenever you have the formation of the green bars above the zero level, it's an indication of a bullish momentum. On the other hand, when you have the formation of the red bars below the zero level, it's an indication of a bearish momentum. So looking at the indicator, you will already know what momentum is prevailing at any given time, right? So whenever you have the green bars above the zero level, you will know that bullish momentum is prevailing. So if you want to trade in the direction of the trend, you should be looking for only buy opportunities when the green line is above the zero level. And then when you have the red line below the zero level, knowing that it is a bearish momentum that is prevailing, you should be looking for sell opportunities. All right, so whenever you find the indicator in a particular territory, positive territory or bullish territory, my recommendation is to trade in the direction of the trend, in the direction of the prevailing momentum. So now let us briefly look at a few examples. All right, in this case, we can see again that we had the prevalence of a bullish momentum, and as you can see, we had a bullish trend. So in this case, we should look for buy opportunities, right? Whenever you have the histogram bars climb to the top and then you suddenly start seeing a drop in the length, just know that a pullback is starting, right? A pullback is starting, in as much as the pullback could eventually result into a reversal, but you should know at least that a pullback is starting. And then if you notice that the bars begin to grow in length again, it shows a continuation of the trend. So let's say you had just identified this bullish trend and you already have the first swing form, and you noticed that the length of the bars had begun to decrease in length, showing that there is a pullback coming up. If you are a scalper, you can decide to trade the pullbacks, trade the impulse moves and all of that, right? But if you are a swing trader, you just want to focus on the trend. Okay, so let's say you identified the opportunity here. Maybe you did not catch the trend on time, but you had identified the opportunity here. So as the length of the bars began to get longer again, it would have been a good opportunity to enter a buy, owing to the fact that this is a bullish trend. So we are expecting the price to keep going up. So after entering a buy trade, you can set your stop loss below the previous swing low, and for your take profits, you can either decide to use the resistance zones, or you can decide to wait for the bars to start getting short again. Remember that when the bars start getting short, it shows that a bearish move is imminent. So in some cases, like I said, your pullbacks could result into a reversal, and that is what happened here. In fact, the indicator gave a signal for a reversal here, but quickly we had a bullish reversal again, because there was actually a breach in there was somehow a breach in the bullish structure. As you can see, that at this point there was a false breakout. Now because of that false breakout, the indicator gave us a bearish reversal signal, because the red lines forming below the zero level shows a bearish reversal that is forming right after we have the green lines. So it shows bearish reversal, but it was just a false breakout. So we quickly had a bullish reversal signal again. All right, and the bulls continued. Then shortly afterwards, we now had the actual bearish reversal that prevailed. So we can see that we had a breakout to the downside here, and we even had a confirmation as the price retested this breakout trend line, this breakout point, the bullish trend line. As you can see that the price retested the bullish trend line, and then you can see that a bearish reversal signal was given, and the red histogram bars formed below the zero level, and right after that we had a sell. Right after that we had a sell. So this showed sell momentum. So if you had noticed this breakout on time, this bearish breakout, and the giving of bearish signal, bearish reversal signal to be precise, you would have considered entering a sell, setting your stop loss right above the previous swing low, and then you would ride the bearish trend till the end. Okay, if you are a scalper, you can decide to trade both the impulse moves and the corrective moves, all of that. But if you're a swing trader, you can just ride the sell to the end, right? So if you had entered on time, you will just wait for a flip to happen again. That is, you will wait for the red bars to turn into green bars above the zero level, and that will be your exit signal for the sell trade. All right, so the reverse is the case for a buy trade. If you are in a buy trade and let's say you are swinging and then you suddenly find the formation of the red bars below the zero level, it's a time to exit your buy trade. Okay, for a sell trade, when you find the formation of the green bars above the zero level, it's a time to exit your sell trades. All right, but if you are trading multiple positions, or if you're opening multiple positions within the trend, then you'll be looking out for the length of the bars. When the bars get long and suddenly start seeing the formation of short ones, it's time to exit because a pullback is imminent. And then when the impulse move forms again, you can decide to enter in the direction of the impulse move. And when the longest bar forms and you begin to see shortened bars, you can exit. If you want to ride the pullback, you can go ahead and ride the pullback. And then when you notice that the bars begin to elongate again, it's time to enter in the direction of the trend, and so on. Okay, but make sure that whichever method you are using, whether you are swinging or you're scalping, make sure you always employ good risk management. All right, do not trade with an amount that you cannot afford to lose, and ensure that you do not risk more than 2% of your account balance in a single trade. Okay, and make sure that you always use good risk to reward ratio. For example, if you are risking $1, you should be targeting $2 minimum. If you're risking $10, your minimum profit target should be $20. That is a risk to reward ratio of 1 to 2. Okay, so that is it for this video. I hope you found this video insightful. Do not forget to like and subscribe to the channel, and don't forget to click the notification bell either, so that you do not miss out on more trading videos like this. In the meantime, I thank you for watching this video, and I hope to see you next time. Stay safe, stay smart, and happy trading.